All right, good morning, Trade Pros. Welcome to Morning Market Update for July 9th of 2019. July 10th. It is now Wednesday, the 10th of 2019. Hope you guys had a wonderful day so far, because we had a huge day in the markets, and we have a lot to cover and talk about. Today is Federal Reserve Day. That's the only way to capture this day. It's all about Jerome Powell and the gang at the Fed. We're going to talk more about that in a moment. First, Morning Market Update, the Morning Market Fun Fact, rather. Through the first half of the year, ending June, Microsoft and the so-called FANG stocks, Facebook, Apple, Amazon, Netflix, Google, accounted for 20.5% of all the S&P 500's total gains. So if you think about it, just 6 stocks accounted for a quarter, or a fifth rather, of all of the S&P 500 market's gains. So if you're wondering what's leading this rally, look no further than FANG plus one, and that one's Microsoft. All right. Yesterday, we didn't really get any fireworks from Jerome Powell, the Fed chair of the Federal Reserve. But he may set some fireworks off today. And in fact, he already did. This morning at 8:30, the testimony to Congress that he's going to do today, he's actually testifying before the House Financial Services Committee. But what he's going to testify to them was released at 8:30. All right, so the news is already out of what he's going to do, and that's why the markets are responding so fiercely. At 10 a.m., he's going to read out what basically was just submitted at 8:30, and then he's going to take questions from the Financial Services Committee. That's going to cause volatility. We're going to get more details that haven't been released to the market through the way he answers these questions. And if he does it masterfully enough, maybe we won't get any new information. However, when they're answering questions in such a long period of time that tends to be tiring and exhausting, he starts to leak out information, or it just comes out and the market spins it in a certain direction. And it's very important to know what he's thinking and how the Fed's reacting. However, the news is already out. And I'll tell you this, there's now a 100% chance of a rate cut at the end of July. July 31st is the next policy meeting. All right. And here's what he said at 8:30 in his testimony to the Financial Services panel. He said there's a risk of weak inflation, and he said that it will be even more persistent than the Fed currently anticipates. So here's what we said before. The strong labor market has been a really good thing for the economy. All right, we have had stronger inflation. However, this stronger inflation was labeled as transitory, and it was shrugged off. Now that the market's expecting a 100% rate cut, hang on. Let me just turn down the squawk for a second. Oops, not up, down. As I was saying, now that the market's expecting 100%, at least a 25 basis point rate cut in July, 18%, Victoria just checked this morning, are even anticipating a 50 basis point rate cut, which is 2 cuts. All right. And so now that the market's priced that in, it's up to Jerome Powell to tell the market why they're going to do it. All right. He needs to support his action somehow. He can't just say, I want to do it because Donald Trump's asking for it and the market will rally. He needs to get some data, because the Fed is supposed to be, quote, evidence-based and data-dependent, unquote. So here's what he also said. He said, look, inflation looks like it's going to be weaker than we currently anticipated. Therefore, what? Inflation's lower, we need to cut interest rates. Inflation higher, they need to raise rates. So he said weaker inflation. He said spending is solid. Q2 economic growth may have moderated, saying that the economy is slowing down in the gains. All right, many at the June FOMC saw the case for somewhat easier policy, confirming the FOMC members are looking for a rate cut. All right, housing manufacturing looked to have dipped again in Q2. Another reason, weak economy, to start cutting rates. As investment seems to have slowed notably on trade fears. All right, and you got to remember, there's also FOMC meeting minutes coming out today at 2 p.m. That was in the heat of the trade negotiations. And so we're going to see what language they use. But those meeting minutes in the afternoon are immediately becoming less effective and less important with what he said this morning. So all the volatility that should have come out at 2 p.m. is being front-loaded before the market opened. I mean, we're up over 20 points on the S&P before the market's even open. All right, so keep that in mind. The FOMC event this afternoon doesn't become as important unless there's some huge game-changing information in there, or anything that contradicts what the market has now priced in, which is a rate cut. All right. He said benefits of a strong market have been more widely shared in recent years. Economy performed reasonably well over the first half. Job growth was healthy. Very interesting. All right. Jerome Powell is going to cut interest rates, and he's going to have to make it seem like it's not to please Donald Trump and the stock market. All right. And he's saying, yeah, we have weak inflation, but we have a pretty strong economy overall in the first half, and job growth was healthy. So what are you cutting rates for? You're cutting rates because of fears of the future of a contraction and a slowdown. Now, you would think that a Federal Reserve president saying the economy is seeming to taper off, we're slowing down in investment, a lot of things we're tracking are slowing down, therefore we're cutting rates. You would think that means the stock market would go down. Bad news is good news. In 2019, with the Federal Reserve, don't fight the Fed. Cutting rates means stocks are going to go up. Why? Cheaper borrowing leads to more borrowing for companies. All right, cheaper money means some more growth, more development, more R&D, more sales. All right, cheaper loans also means consumers could purchase more products, and essentially we're going back into a downward interest rate cycle. All right, this is the start of it. They're going to start to cut rates. Here's a question I have to ask Jerome Powell. What if you cut a rate at a market all-time high and 6 months down the road we hit a recession? All right, you're going to have less to cut from. There's only so much they could cut before they get to zero. All right, that's what we have to understand. And so each and every recession that we've seen in the history of the United States, the federal funds rate has continued to get lower and lower and lower. And now we're getting close to zero, which is where Japan has been for the last 30 years. All right, well, a little bit less than 30 years, but for a very, very long time, and they can't seem to get themselves out of it. And think about this. You go to a party, there's a punch bowl. All right, it's spiked with a lot of alcohol. They take the punch bowl away and give you just straight juice. You don't like that. That's exactly Victoria. Victoria summed it up nicely with a big no. So Federal Reserve is spiking the punch bowl again, and I think it's dangerous. I think that what they're admitting here is the economy is slowing down. So let the market party on. Equities are up. Gold is up because the dollar is down. The US dollar does not like stimulus. Dovish policy drops the value of the US dollar. That pushes gold higher because inflation or safety hedge. All right, so gold's going up. Stocks are going up on short-term optimism. All right, bonds are going up as interest rates are going down. All right, and the question here is, what could go wrong? Buy everything. Everything's going up. What could possibly go wrong? And while at the moment for today, we're not going to look to start fading this bullish momentum. You never want to fight the Fed. What I'm saying is shots are fired here from Jerome Powell in a sense that for the short term, yes, asset valuations are going to stretch a little bit more. But for the long term, they're starting to admit that we're in the early stages of recessionary pressure. You look at the yield curves, they've been inverted and holding in negative territory. And now they're starting to cut rates. So from a larger perspective, it's a bad sign for the economy, but party on to the markets and assets. All right, what could go wrong? In today's markets in Asia, Japan's down 0.2%, Hong Kong's up 0.3%, China's down 0.4%, India's down 0.5%. In Europe at midday, London's pretty much down 0.1%. Same with Paris, Frankfurt down 0.5%. So red across the board on equities. This was pre-FOM or pre-Powell's release for the testimony at 8:30 in the morning. Futures are now all up in the positive in the United States. All right, with NASDAQ having hit an all-time high, right? Pre-market. Just confirm with Victorio because that's Mr. NASDAQ himself. All right, crude oil today is up 2.5%. It's on the back of some API oil inventories yesterday. We had a minus 8.1 million draw versus minus 5 prior. So inventories are declining. So less supply with equal demand equals higher prices. Today at 10:30, we have a huge crude oil report. That's probably the best opportunity of the day. Even with the Fed or Jerome Powell testifying in FOMC meeting minutes this afternoon, I think oil is still the best opportunity of the day for trading because there we have a cleaner trade that happens on a weekly basis. It's not it's news driven, but it's not a one-off event. It's a weekly occurrence, this inventories report. We're going to trade at 10:30. I invite you guys to trade it with us. 1 hour of one day, you can make your whole weekly income. I don't care what job you do, right? You'd be CEO. In that point, you just trade bigger and you'd make that same money. So that's the opportunity for you today. What else I have to share with you? Watch at 10 a.m. Obviously, markets are going to get a little bit rocky as Jerome Powell starts his testimony. It'll probably take him 20 minutes or so to read his prepared remarks. Even though he's already released them, he's going to read them. And now the Financial Services Committee will then be asking him questions pretty much until early to mid-afternoon. These things could go on for hours, and it's super important. At any moment, he could say something that triggers the market. So today, you got to have a news service or trade in a room where they do have a news service, such as ourselves. We break news live and we trade it. There's going to be a ton of opportunity. All right, today is sort of the super Wednesday of the week, and things slow down towards the end of the week. Tomorrow he testifies again, but we know that it's going to be the same testimony, right? Be in front of the Senate tomorrow. 7 a.m. we had mortgage applications. They came in a little bit weaker than expected. Less people applying for mortgages. You know what helps people apply for mortgages more? Lower interest rates. 10 a.m. we have Atlanta Fed business inflation expectations. Our very own oil desk manager, Steven, lives in Atlanta, so he has the inside scoop. No, he doesn't. Just kidding. Insider trading. He doesn't have the inside scoop. 10 a.m. wholesale trade as well. And then Jerome Powell begins his testimony. 10:30, the inventory report out of oil. This is going to be very interesting because we're going to get oil inventory right at the same time as Powell's getting prepared to take questions. It creates some super volatility. 1 p.m. results of a 24 billion 10-year note auction. 1:30 Fed's Bullard speech, and then 2 p.m. FOMC meeting minutes. We'll see if there's any volatility out of the event, but I don't expect it to be volatile because everything we need to know was just confirmed this morning. All right, the Fed's going dovish. They're looking for a rate cut. Market's anticipating it. We're on pace. All right, so this market has been overextended in the current cycle of the upward move. Look for a little bit of a pullback early on, but I do see a continuation to and through all-time highs today. I think that's the play as the Fed confirms its dovish stance. All right, you guys have a great day. Watch the news. Be very careful. You have to have a news squawk to day trade successfully today, because at any single moment you get a tape bomb. There's a major market moving event out of Federal Reserve Chair Jerome Powell's testimony and Q&A period, more importantly. Have a great day. Manage your risk. Trade like a trade pro. Belong to a community. Might I suggest it's ours. So see you in there. I'm going to turn around, open up our trading room for a team, and rock it today. Take care, guys. Have a great day. Ciao. All right, trade pros. I'm going to start out with the S&P 500. I'll give you some analysis, some key levels, and trade ideas. We'll hand it over for Mark to do the Dow, Victoria to do the NASDAQ, and then last but not least, Boxman to talk about oil. So let's get started. I'll kick it off with the S&P 500.